Hey gang, what's up? HitoriFX here. Welcome to the 24th episode of the weekly market outlook with TRADEXPROP. Now, in this episode, I will be covering the dollar index, gold, and the S&P 500. If you have any other asset classes you would like me to cover, just leave a comment down below, or even better, join our free Discord channel where you can talk to me as well as other like-minded traders. Alright gang, so we are coming up into the second half of October. We have 18 days here on the monthly candle, and let me just bring you through where we currently are. Let's do a recap of what we did. So the new monthly candle opened here for October, and then we barely saw any bottom wick, and then we just saw a large push move higher, and this is mainly driven, I think, by a fundamentally strong dollar, where we saw a very great report come out for NFP, and also we are seeing inflation come down. Even though it is still higher than expected, it is still an all-time low. So I think this is what's going to continue to push the dollar higher, maybe into some of these areas where we could see rejections right here. So as of now on the monthly, really strong bullish momentum. I am personally expecting us to continue higher, maybe into 104.447, and then we could see where we get from there. So as of now, still bullish, especially after seeing this support form right here. I'm not expecting the dollar to kind of push lower to break its own low. Instead, I'm expecting any dips to be discounted, pricing to be longing for swing positions. All right, so as of now, there's not much going on. We understand that from the previous outlooks, we do have this large area of structure around the 106 price point that we could see price transfers higher into to find reactions from. So anywhere right here is good traffic. This is pretty much my nearest monthly target as of now, but we could definitely see price transfers higher into these prices right here. And if we close bullish right here, which I think we will close bullish, I will now readjust my support down here, but it hasn't happened yet. So let's just wait for the monthly candle to close on the DXY. So moving down to the weekly time frame, let's see what kind of price action we can decipher. So really bullish, as you can see, for the past 2 weeks it's been super bullish. We bottomed out right here, formed a swing low, and now we're just seeing price come higher. So like I said, based on the monthly, we understand that we are in a bullish bias based on both fundamentals as well as technicals, right? We did expect price to kind of come down lower before this large push higher, but we didn't see that, and we just saw price find support around 104.418, and prices came up. So I'm not expecting this to be breached as of now. I do expect price to kind of retrace slightly to correct this large move before continuing higher, right? And if you notice, we have come into this area of potential resistance right here at 103.220. We have a lot of rejection wicks right here, and we also had this potential support breaks against resistance, and then we broke it once again. So we could see price come down to test it to continue higher as of now. But on the options that we do break this wick, I am eyeing this level right here at the 101.732 to potentially be an area of support for us to bounce higher from. Okay, if we do close above 103.220 with a body closure, we could see price come all the way up into this next area of structure right here at around 104.50. Okay, so we could find a reaction from there. So any longs in the short term should be taken off around this price point right here in case it goes against us. Okay, so we have a rate cut coming in, right? We have rate cuts coming in for the month of November and December. We have the two last rate cuts. I mean, not rate cuts, it's not confirmed to be a rate cut, but people are kind of expecting it to be a potential continued rate cuts, but seeing as how inflation is still quite low, it's still unconfirmed if we will, see a rate cut or not. So just based off price section right here, we kind of broke down the weekly chart. There's not much to see here apart from the fact that we're still bullish, and we kind of need to kind of like consult the daily time frame right here, because here on the weekly, let me just go back here one sec. The reason I say if you break above this level, we could see potential longs continue up into this area is because we have clean traffic to the left hand side. There's no area of resistance as of now, other than right here, the support area. Price broke it, came up on resistance, and then we came down lower. I don't try to predict where a resistance might form. I just kind of look at where it has formed support or resistance before, and then I take that information. Right here, we have another support that was broken. Yes, price could come up to here, then reject lower, but it hasn't happened yet, right? Because not every resistance, not every support that becomes a resistance will actually hold in the future, right? It's expected, sure, but until it happens, we can't say that it has happened. Okay, but this has happened, so right here is going to be my final target for any short-term intra-week or maybe even like shorter-term swing positions, right? So on the daily, we kind of see more information, strong bullish movement right off the bat, and kind of we are in an area of potential rejection as of now. Okay, so in order for my weekly idea to be valid, I kind of want price to break and close above this level to continue higher. We have clean traffic here again to the left hand side. Yes, potential areas of rejections are here, but as of now, this is the most obvious and the cleanest area that price is actually rejected from. Okay, so we are coming up here and we're finding some kind of reaction that is rejecting price from going higher. So we could see a short-term move lower if we were to reject from this area, but it won't be for a long-term short. Like I said, I'm still bullish on the dollar. Any dips from reactions to areas of resistances for me at the moment is still just a push lower into discounted pricing for a pullback and then a continuation higher. Okay, so as of now, we are rejecting this price point right here. It could be from this area of resistance. If we do come down lower and we break kind of like this wick right here, we could kind of continue down into the next area of support, which is around 102.50 right here. So we could see price transverse down and then we could see a reaction higher. But if we do break this level, we are likely to continue down into this area of previous structure right here. Resistance breaks, becomes support. We have clean traffic to support this move lower, and this would mean that on the weekly we're going to see a larger pullback down into this area right here than previously anticipated. Okay, but on the off chance that this is just a slight roadblock, then I will look for price to break above and close above this level, and then we could see price transfers higher into 104.339, which is around a 1,000 point point range right here. Any higher than that, I would say it's a bit overextended, but if it does break higher and we do break past 104.569, the next area I would target is going to be like the around like 104.825. Yeah, right around this price point right here. Yeah, so this price point is what I would likely to be targeting. I would like a strong push to fill in this wick before targeting this area to the upside. Alright, so that is, I think that's pretty much it for the dollar. I don't want to say that we will continue to overextend right here, but if we do break above this level, could see this push higher or even to the midway of this range. It is still around like 500 point move, like a 500 point move. Okay, so that is pretty much it for the US dollar. I am of course thinking of, at the moment, still adding in more pairs in the forecast, but if I do add in more pairs, do understand that I would have to just focus on probably just like one time frame per pair, if that makes sense. But it's still something that's in the works. I'm still going through my list of what things I should add, but as of now, still the dollar index, still the S&P 500, and still gold, right? But looking at the economic calendar in local Malaysian time, GMT +8, let's look at what the next week looks like for news releases. And we don't really have much news releases. We have a bank holiday of the USD on Monday, so you could expect forex pairs to be a bit lackluster in movement, but you could then try to look at other pairs, like gold is moving regardless if the US has a bank holiday or not, because it's a globally traded commodity and one of the most popular ones at that. There is no news on Tuesday or Wednesday and Friday, but there is news on Thursday. So high impact news for retail sales and unemployment claims is coming in on Thursday. So we could see a bit of a lackluster movement coming in at the earlier half of the week, and then on Thursday we could see a big spike up, and depending on what area that we reach, we could either see a continued move of that big spike up or down in Friday, right? If we have reached an area of resistance on Thursday, Friday we could see a pullback phase for that week. Okay, so that is it for the US dollar index, right? Let me just move up to the monthly, and let's go on to the next pair, which is the S&P 500. All right, I think I'll just go here, just pull that up. Okay, so here we have the S&P 500 on the ON data feed, and I don't have anything marked out on the monthly because I just removed it all because I realized it's a really bullish chart. There's not much price action to, or at least market structure to base a analysis on. But here, let me just zoom into the candlesticks. Obviously, we've been bullish for a long period of time, and here at the moment on the current monthly chart, we are making all-time highs this month. We've been making all-time highs for like a long time now, all the way back here, but at the moment we are in a bullish candle on the monthly. Of course, it hasn't closed yet, but we have broken previous month's highs to make all-time highs with a large rejection weight to the downside. So I'm curious to see how the weekly as well as the daily chart looks like, because there's not much to base things off of as of now, other than we have breached the previous month's high and we have made a new high. So are we going to be seeing a pullback? Are we going to see a bearish candle close? All of those depends on what we see on things like the weekly as well as the daily. Okay, so here we have the weekly chart, and we have a bit more structure now to play with. Let me just bring it here. So as of now, on the weekly chart, last candle made the all-time high at around 5828 on the ONA data feed, and we have formed a swing low, right? So a swing low for me is categorized by two other higher lows just next to it on either side. So this is that swing low, and we closed pretty convincingly above these highs right here last week. So I'm inclined to think that the bullish trend is still going to continue, as we have seen a large wick to the downside, and then we close above these highs. We are likely to target and make new all-time highs once again. And then fundamentally, because of the rate cuts, people are now going to be putting money from lower risk assets like bonds and investing in the dollar on fixed deposits. They're going to be transversing those money or those monies into different industries that are a bit more higher risk to give higher returns. So things like stocks, things like other asset classes that will push indexes up is probably a popular target for the US market right now, which is why we're seeing this continue rally up. And until we see the next Fed decision, I'm thinking that we definitely could see higher prices as of now until we see a stagnant move. But even if we do see the price stagnant out, I'm still thinking that it's not the end of the bear trend. We're just seeing some profit taking, and then we are going to see price gravitate lower to find support to continue higher once again. That's what my long-term view on the S&P 500 is, right? Both fundamentally as well as technically speaking. So if next week we do for some reason come down to break this low, the next area of potential support is going to be this weekly potential RBS, which is resistance breaks become support. And if we do come down lower than that, we do have clean range all the way here to correct this move down into this support at 5393. Okay, so if we break below this, then likely to see this range being corrected right here. Even though I'm not expecting that to happen, it could happen. All right, so going down to the daily, let's see what we find on a more shorter term perspective. So also still big bullish candle, really strong, and still expecting this to be taken. We have formed a new support at around 5793. If we do come down here, we could see a potential retest to break this high. If we close beneath it, we could see price correct this clean range right here all the way down into 5703. Right, this cluster of wicks right here have shown us that in this price point, the market has respected it and it has found some value. Be it liquidity, be it supply demand, be it an order block, be it institutional buying. We don't know any of those things. We are not institutions, right? But what we do know is that we can obviously see that for some reason price has found value at this area. So if we do come down to it, we could expect a continued push of it. But if we close really aggressively, then we could see price continue lower into some of these price points at around 5634. But before we even look at this area, there is one area that I would think holds some interest, which is this one right here at around 5765. If we do come down lower to it, we could see a potential reaction higher. The only reason I didn't mark it out right here is because, like I said, it isn't actually a support yet. Right, until it has shown me that it's going to be supported, it isn't a support. Okay, it's a potential area. So I'll be looking at this and I'll be monitoring what it does here. We can also find support here, but as of now, this is the one that's shown to me that is actually support the price. So let's see what it does. Of course, look at your econ calendar. September has passed us, and for those that might know, September it was supposed to be a lackluster month for most stocks and most indexes because of things like earnings reports coming out, and just a bunch of other factors that you could go online and search the September stock market effect, and it will show you the whole explanations. But I won't go too much in depth for that. I'll just leave it to you to do your own studying. Okay, so back on the monthly of the S&P, let's look at our next favorite pair, gold. Well, this is my favorite pair. It's why I trade on a daily basis. So let's kind of look at what it is showing. So same thing, monthly, not much to see. Same thing with S&P, which has been trending bullish all the way here. So when you are in this kind of price action, right, it's not like the S&P. We had a clear direction where we were breaking highs and we were closing above it really convincingly. Here on the monthly, we're just kind of like within the previous wick of the monthly candle, and fundamentally long term I am still bullish on gold for a few reasons, and that's because despite the lower inflation, I think that there is still some form of a global uncertainty coming into the markets with the attack of Iran on Israel. I do think that that is a cause for a lot more people to demand for gold, which will increase the price of it. So I do think I'm still long-term bullish on gold, but on the off chance that at the moment we do come down all the way here to break this low, we could be coming into this low right here at around 2471 on the Owenda data feed. So once we see this disclosure, we will know, because we are quite far away from the open. We are like around like 400 points from the open. So I mean $400 actually from the open. So sorry, 400 points. I lost my track of mine, but 400 points from the open is quite far. But if you do break this low, definitely I could see it coming down to some of these structure points right here. Okay, but as of now, this is still what I'm looking at, still bullish, and we'll expect that to continue higher. So on the weekly chart, let's look at what last week did. Last week we closed with a resistance. Sorry, we closed at resistance, but we're showing a large wick to the downside with a really small bullish body. So what this means is, for some people they call this like a hammer. Basically just what price did was price opened, it came down, and then it pushed higher a bit and then closed near the opening price. So there are a few ways you can decipher it. Some people call this taking out liquidity to fund price higher, but if you're reading just price action and you're reading the candlesticks, it's really just telling you that at resistance we are seeing little intent to break above it as of now on the weekly chart, right? Yes, we did see a large wick to the downside, but we closed unconvincingly because most of the volume is held within the body of the candlestick, not the wick, right? So proving my point, we are closing respecting resistance. If we do break this wick, we could continue to see price thread lower into this wick, or maybe even into the structure point right here at around 2496, right? We do have this potential area of structure, this resistance broken, it could become support, but hasn't happened yet, so I'm not going to count it in for now, but just monitor this overall area. But before reaching those areas, we could just come down to some of these wicks right here. It's around, let me see how far, it's like 5,000 points, so pretty big. So if we do break this wick with aggression, we could see price come down to retest some of these wicks right here before it continue to move higher, right? So any dips for now is still, for me, just a reason to go long from, right? It's just a dip into discounted pricing for me. We did cover some of these previous structure points right here, but I just decided to leave them out until we actually reach them to keep the charts clean. But on the off chance that next week we just come down and break all these structures lower right here, it's a really messy structure point. We have support. So instead of just drawing all of this out, I will just wait until price comes down to any of these areas. Then it's showing me a new supports formed, and then we're breaking resistance. Let me just show that better. So coming down here to a random support, price found support, broke resistance. This is probably where I'm going to be looking at, potential realignment to go higher from, right? Because there's so many structure points, it's hard to like pinpoint which ones to buy off from. Like one here, here is one, but this is it's sketchy. Basically, this is sketchy. But if I had to pick one, it'd probably be this one, like 2414 would be the nearest one that's a bit more clearer. Okay, and it has shown many times of interest in the past, so this would probably be an important zone we want to look at. Okay, but even if you break and close beneath this one, it still is just one here. There's no clean traffic, there's no clean structure. I can't really make a decision based off the weekly chart. Okay, so as of now, just removing all of that, I'll put the structure point as my latest structure point. Okay, so moving down to the daily here, we see price coming into this area of large wick rejections. Okay, we had this barrier blocking price from the all-time highs, and if we do continue higher, breaking this high, we could definitely see price transverse into this area to show a potential rejection, or if we do close above it, it could come up to retest all-time highs or even break above it. Okay, it all depends on how we trade around this area. If we, it's like let me just see how, like a 990 pip range, still pretty big. So we could take some short-term trades up into this area, and then once you reach it, we will monitor the reaction. Okay, but as of now, we are really strong bullish. This candle close with, you know, no wick to the downside even, so that's a bit crazy, very little wick at least right here. So if we do come up here and we do come down lower, we could see a retest of this, or if we pull back first, find support, you could take longs up into 2672. If we break below 2607, we could see shorts down into 2559 as our next area of support. Keeping in mind this structure point might also form some reactions, but as of now, this is just the level that we are looking at. Okay, next I'll monitor this entire area right here. Still really messy. I'll just keep that in mind, but this is my next obvious area of support right here. Alright, if we break this, likely coming down into this range of structure right here. Okay, so that's pretty much it for this week's forecast. Kind of went through it pretty quickly. I hope you guys followed along well. In the future, soon I might decide to just add more asset classes to cover wider groups of people that trade the markets, but of course that would mean I would have to cut down my time that I spend on each individual product, right? Like here I spend a lot of time on the monthly, the weekly, the daily, but you know, if I do add more, you know, pairs in, I would definitely have to be removing the monthly and the weekly and probably just sticking with the daily time frame. All right, so yeah, thank you all for watching. Keep your account safe, you know, don't over risk if you don't like have any experience over risking. If you don't want to, yeah, if you're uncomfortable with risking too much, don't risk too much. Keep your mental capital safe, not just your trading capital but also your mental capital safe, because every day remember that you can only take so many losses and then still be okay at the end of the day. I personally just take 1 to 2 trades a day, and then I call it, and then I just call it. If I take a win, I call it. I take a loss, I will look to re-enter if possible, but it would have to be at a very good setup, right? I just don't rush into trades myself. So yeah, that is it for me. See you guys next week.